Welcome back to Curious Commerce. Today we will discuss about cash flow statements. Majorly, we concentrate on meaning of cash flow statement, activities, and practical business examples. Many businesses earn profit but still fail. Sounds strange, right? Today I am going to tell you why profitable companies shut down and how cash flow statement reveals the truth. If you understand this one concept, you will understand business better than 90% of students. Imagine a shop owner named Ramesh. His income statement shows profit of 5 lakh rupees this year, but still he cannot pay salary, rent, or supplier's bill. Why? What are the reason behind that? Because customers bought on credit. Stock money is blocked in inventory. Bank EMI is due, but no actual cash in hand. Profit is an opinion, cash is reality. That's why we need cash flow statements. So, what is a cash flow statement? Cash flow statement explains where cash comes from, where cash goes, and it shows actual cash position, not accounting profit. Very simple. It tracks only real cash movement, not credit, not based on assumptions, only actual inflow and outflow of the cash considered. You can say this in examination. A cash flow statement is a financial statement that shows inflow and outflow of cash during a period to determine the actual liquidity position of the business. But on Curious Commerce, we understand it practically. So let's break it. Where cash comes from? Cash inflow can be from cash sales, collection from debtors, loan received, capital invested by owners, sales of assets, and interest or dividend received. For example, you can sold goods rupees 10,000 cash. The transaction is cash comes in. You collected rupees 5,000 from customer. It leads to cash comes in, right? You took bank loan of 50,000 rupees. Once again, cash comes in. This is cash inflows. But where cash goes? Cash outflows include purchase of stock, salary payment, rent, electricity bill, loan repayment, buying machinery, and taxes. For example, paid 8,000 rupees as rent. Cash goes out, right? Purchased laptop rupees 40,000 rupees. Once again, cash goes out. Paid staff salary of 20,000 rupees. The same thing, cash goes out. Very practical and very real. Let me explain the most important point. Cash flow statement shows actual cash position, not accounting profit. You may sell goods worth 1 lakh rupees today, but customer will pay after 3 months. So, profit shown today, but cash will come later. That's why companies collapse even with profit because they run out of cash, not ideas. Business survives on cash, not on profit. Let me take a small example. Profit rupees 50,000 rupees, but debtors increased rupees 40,000, stock increased by 20,000 rupees. So cash blocked 60,000 rupees. The result, profit but negative cash inflow. That's danger. So remember, profit tells performance, cash flow tells survival. Companies die due to lack of cash, not lack of profit. If you master cash flow statement, you are no longer just a student, you are thinking like a financial manager. Most learners think profit and cash are same, but in real business, they are completely different. Today, let us clearly understand what exactly is cash flow. Cash flow means movement of cash and cash equivalents in a business. Very simple. When cash comes in, we call it as inflow. When cash goes out, we call it as outflow. So, cash flow is all about movement, not profit. It includes cash receipts. Cash receipts mean money coming into business. For example, cash sales, money collected from customers, loan received from bank, capital invested by owners, sale of old furniture or machine. Each of these increases cash balance. You can tell to anybody if cash is entering your hand, it is cash inflow. And the same way, cash payments. Cash payments mean money going out. For example, paying rent, paying salary, paying to stock, electricity bill, loan repayment, and buying equipment. If money leaves your hand, it is outflow. Very easy logic, right? Cash flow is different from profit. This is the most important part. Let's understand with example. You sold goods worth rupees 10,000 today on credit. So in books of accounts, we record profit, right? But no cash received yet. Is there cash flow? Practically no, right? Now another example. You received 5,000 rupees from an old customer. No sales activity takes place today. No profit arises today, but cash increased. So, profit is not equal to cash flow. Profit belongs to books, cash belongs to reality. This is why many profitable companies fail because they do not manage cash flows. Dear learners, you can write it. Cash flow refers to the inflow and outflow of cash and cash equivalents during a period. It differs from profit because it considers only actual cash movement and ignores non cash items. So remember, cash flow means movement of money. It includes receipts and payments. It is completely different from profit. Profit never be equal to the cash. If you understand cash flow, you understand the heartbeat of business. Thank you for watching. Follow our WhatsApp channel, Curious Commerce Financial Management Hub, for daily finance learning. Please like, share, and subscribe. Cash flow management will be continued in part second. Once again, thank you all.